is the bottom in for Bitcoin. What Mantis deployed into and what comes next. Quick note before we start. Nothing on this channel is financial advice. I'm an analyst and a builder, not a financial advisor. Mantis is a cycle analysis tool. What you do with that information is entirely your own decision. The Accumulatoor just fired. Tranche 1, 0.105 Bitcoin, deployed on the first confirmed weekly cycle low inside the 4-year cycle window. Buy price locked publicly, permanently, and immediately, the way it was always going to be. The receipt exists before the result. That's the whole model. But here's the question that's been sitting in the room ever since that candle printed. Is this it? Is the 4-year cycle bottom already in? Or is Bitcoin about to do what it has done in every previous bear market? Stage a convincing relief rally, lull everyone into confidence, and then take out the June low. One final time before the real bottom forms? That is the question this video is built around. And the honest answer is we don't know. But Mantis gives us a framework for navigating both outcomes. And that's what we're going to walk through today. Let's start with the facts on the ground. The first weekly cycle low inside the 4-year cycle bottom window confirmed on June the 12th, 2026. Price, $63,580. The daily candle body closed above the 10-day moving average. The trigger, the Accumulatoor, has always been waiting for. Tranche 1 deployed automatically by the rules, without emotion and without hesitation. The 4-year cycle, low window, opened in June. The optimal date sits in October. The window doesn't close until early 2027. Tranche 1 has fired into the first opportunity inside that window. Tranche 2 is waiting for the next confirmed weekly cycle low. Now, was the June weekly cycle low the absolute bottom? History says probably not. But here's what history also says. This is exactly the right place to have begun accumulating. Every previous 4-year cycle bottom has rewarded the people who deployed into the window, not the people who waited for certainty that never arrived cleanly. The receipt is locked. The question now is what comes next. What's happening right now is not new. Bitcoin has done this before twice in the 2 previous comparable bear markets. In 2018, Bitcoin fell below its 200-day moving average, rejected a retest of that line from below, and found a major price floor in June. A relief rally followed, back toward the moving average. In 2022, the same fractal appeared. Bitcoin broke below the 200-day average, rejected it on the way back up, and established another significant low in June. Another relief rally followed. Now look at the current cycle. Bitcoin moved back to the 200-day moving average, got rejected, and formed a new low in June, right on schedule with the fractal. The pattern is striking. In 2 previous bear markets, June provided a major price floor, a meaningful low that preceded a multi-week rally. And in both of those cycles, the June low was not the absolute bottom. The final definitive low came later, after the relief, after the consolidation, after everyone who was going to give up had given up. That is the blueprint. June gives you the first major floor. The final floor comes in the autumn, which raises the real question, how bad does the autumn get? History gives us 2 versions of what could happen next, and they are very different. The 2022 path. In the 2022 bear market, the June low was taken out in the 48th week of the bear market. But only slightly, a marginally lower low before the final recovery began. The key signature of that cycle, weekly RSI maintained bullish divergence throughout. Price made lower lows. The RSI made higher lows. The momentum indicator was telling you something the price wasn't. The sellers were exhausted. The 2018 path. In the 2018 bear market, the June low was also taken out. But in the final week of a 52-week decline, and in a much more violent way, a massive capitulation, the weekly RSI did not hold bullish divergence. When price made its final low, the RSI went with it, nuked to new lows, no divergence, no hidden strength, full capitulation. And then the recovery, 2 paths, completely different outcomes, the same starting point. So which one are we in? This is where the technical evidence becomes interesting. Right now, Bitcoin is showing early weekly bullish divergence. Price has made lower lows. The weekly RSI is making higher lows. The momentum picture is quietly improving even as the price chart looks bleak. That is the same signature that preceded the 2022 style outcome, the slightly lower low rather than the massive capitulation. But there are two more pieces of supporting evidence that make this even more compelling. First, the RSI has already been oversold. In February of this year, the weekly RSI hit deeply oversold levels, the kind of reading you typically see at or near a bear market bottom. In the 2018 cycle, at the equivalent June stage, the weekly RSI was still sitting near 50. It had more room to fall, a lot more. The 2018 RSI didn't reach extreme oversold until the final crash in December. In this cycle, the oversold reading has already arrived months early. That significantly reduces the probability of the same depth of capitulation. Second, stablecoin dominance. The chart showing the proportion of the market held in stablecoins, inversely correlated with Bitcoin price, is currently showing weekly bearish divergence. Higher highs in stablecoin dominance while the RSI makes lower highs. Bearish divergence on stablecoin dominance is a bullish signal for Bitcoin. It says the conditions for a massive capital rotation into Bitcoin are building quietly in the background even as the price grinds lower. And finally, the 300-week moving average. This line has been touched at every significant Bitcoin bear market low in history. 2015, the COVID crash in 2020, the FTX capitulation low in 2022. It currently sits at approximately $54,000, which aligns precisely with a major weekly support level from early 2024. If a final capitulation does occur at some time in the autumn, with October marking 1 year since the previous all-time high printed, this is the likely floor. The evidence is pointing in one direction, the 2022 path, a slightly lower low bullish divergence intact, followed by a recovery that starts from a level far above the 2018 style catastrophe scenario. But here's what we are not going to do. We are not going to call the bottom definitively. Not yet. The evidence favors the 2022 path, but the 2018 path is still on the table, and the framework exists precisely for navigating both, not for betting the house on one. If autumn brings a slightly lower low, as the RSI divergence and the stablecoin data suggest is more likely, then we wait for the following weekly cycle low. A higher low confirms the bear market is over and Tranche 2 deploys into a confirmed new bull market. A lower low at the next weekly cycle low suggests something else is at play, and we will act accordingly. If autumn brings the 2018 style capitulation, if the RSI divergence breaks down and price tests the 300-week moving average at 54,000, Tranche 2 still deploys into the better price with the same rules, the same discipline, the same locked receipt. Both outcomes lead to the same place because the accumulator is not trying to call the bottom perfectly. It is systematically deploying across the two most likely cycle lows inside the bottom window. One has already fired, one is waiting. What we are watching between now and autumn is one specific level that changes everything. If Bitcoin closes and critically consolidates above the 200-day moving average, the autumn bear case will be abandoned. In every previous cycle, sustained consolidation above this line has been the definitive signal that the cycle bottom is already in. Not a wick above it, not a single close. Sustained price action, multiple daily closes, holding above the line. In 2015, once Bitcoin consolidated above the 200-day average, the cycle bottom was confirmed. In 2018 and 2019, that consolidation served as one of the best entry points of the entire bull run. In 2022, reclaiming the 200-day average after the FTX low confirmed the bottom was set. The 200-day moving average currently sits at approximately $77,000. If Bitcoin gets up there, holds it, and consolidates, that is the signal to abandon the final capitulation thesis entirely. The bottom would already be in. The framework shifts. The accumulator is already deployed. The next question becomes the exit strategy. Until that number holds, we are in no man's land, potentially grinding sideways, potentially lower. The framework says, stay patient, watch the moving average, and let the autumn window play out. Let me summarize exactly where we stand. T1 is deployed, the buy price is locked, the receipt is public, the case for an early bottom is building, bullish RSI divergence, early oversold readings, stablecoin dominance signaling rotation, the June fractal running on schedule. These are real signals, not wishful thinking. And we know market loves to wrong foot as many participants as it can, but we are prepared for Bitcoin to grind lower. The next weekly cycle low is due around December. We could end up grinding sideways and down like we did for the bulk of 2024. History says one more flush is on the table, though. The 200-day moving average is the early exit from this thesis. If Bitcoin consolidates above 77,000, the wait is over, and T1 having deployed into the June low looks not just correct, but early. Multiple outcomes, one framework, all covered. That is what locked and loaded actually means. The Accumulatoor has deployed its first tranche into the June low, on schedule, by the rules, on the record. The June low fractal matches 2018 and 2022 precisely. The technical evidence, RSI divergence, early oversold, stablecoin dominance, points to the 2022 outcome, a slightly lower autumn low rather than a catastrophic capitulation. The 300-week moving average at 54,000 is the likely floor if the autumn low does arrive, and the 200-day moving average at 77,000 is the number that ends the bear thesis entirely if Bitcoin can get above it and hold. Between here and there, no man's land chop, frustration, the part of the cycle where the impatient exit and the patient are rewarded. Tranche 1 is deployed, the cycle is in control, the framework is doing its job. If you want to run it yourself, Mantis is available with a free trial. Link in the description. Step back, set your alerts, let the cycle do the work.